President-elect Donald Trump's economic plan and what that means for global markets and macro dominates the discussions here at Morgan Stanley's Asia-Pacific Summit.
It's pretty easy to see immigration being hit right away. That's a net negative for growth. The second one, of course, is tariffs. So those are two sort of net negatives. And then the good stuff of perhaps some of the change, like cost cutting on the government, getting the budget under control, deregulation, that may take a little bit longer, which once again is why we're a little less optimistic perhaps in the near term, even though perhaps we think this could all work out by the end of next year.
For now, the mood is bullish. Morgan Stanley's chief US equity strategist, Mike Wilson, has a 6,500 target on the S&P for end 2025.
It's bullish for good reason. The world is still led by the US consumer, and consumer and corporate balance sheets in the US are in aggregate terrific. And the new administration is talking about growth.
Morgan Stanley CEO Ted Pick said the US exceptionalism story would remain intact.
The reality is that many countries are figuring out how to spur their own domestic economy proper.
Ted Pick said a snapback in inflation in the US and deeper deflation in China were risks for the global economy in 2025.
You have sort of the Chinese risk is further deflation, a lack of confidence, and probably the US risk on the margin is that there is there's excess inflation. There's kind of a mutually unified motivation to kind of bring rational thinking to a solution that is pro-growth for both economies.
So overall, the message here is confidence, but it's important to stay nimble in these markets given the tariff risk in 2025.